What's up, everybody? This is Investing Sensei here to bring you another episode in the series of how many shares of a certain company do you need to make $1,000 a month, also $100 a month, and even $100 every single week. So these videos are definitely really fun to record. So we are going to be covering in this video IEP, and then we will jump into the company profile, talk about them a little bit, then we'll look at the dividend summary, and then from there we'll do the calculations, and then we'll look at the dividend yield. So let's go ahead and get started, guys. As well, before we do jump over, if you see a company that you want me to cover that you don't see on the list or haven't covered in the past, let me know. I'll be happy to add it to the list, but let's go ahead and get started. So this is IEP, Icahn Enterprises, L.P, and then if we look, you'll see it's trading around $49.60. If we pull up the company profile, you'll see Icahn Enterprises through its subsidiaries operates in investment, energy, automotive, food packaging, real estate, home fashion, and pharma businesses in the United States and internationally. Its investment segment invests in its proprietary capital through various private investment funds. The company's energy segment refines and markets transportation fuels and produces and markets nitrogen fertilizers in the form of urea, ammonium nitrate, and ammonium. Its automotive segment is involved in the retail and wholesale distribution of automotive parts, but you'll see that I don't want to really click on more because it'll take us out, but overall you'll see that they are main investments are energy, automotive, food packaging, and real estate, home fashion, and it's a huge company, but you'll see that the sector is in industrials, and then they're actually industrial conglomerates. You'll see employees is about 19,536 employees. It was actually founded in 1987. If you want to look at their website, it's actually just IELP.com. You can look a little bit more about them there. But if we look back over here, you'll see if we look at the year to date, you'll see that they're actually up. They're down about 4.87%. If we look at the 1 year, they're actually down about 0.60%. So the 5 years, they're actually down about 8.91%. And then the 10 years, they're actually up 16.93%. That's not a lot of capital gains there in 10 years, but total years maximum since they've been publicly traded has been 728% that they've been up, and that's been since about 1992 or so is where the chart goes to. But if we look at the 52-week range, you'll see the low 52-week range that it's traded at has been $47.17 to a high of $58.50. So it's trading closer to the 52-week low. If we look at the EPS, it's actually 1.03. PE is 48.16. Dividend rate $8. Dividend yield 16.13%, and then market cap is 16.22 billion. This is a master limited partnership, so you would get a actual K1 at the end of the year, so that you would file that. Definitely a headache to file those, but if we look here at the dividend scorecard, again, this is in the industrial sector is what this shows. If we look at the dividend yield, it's a huge dividend yield, which is 16.13%. Very unsustainable in my point of view, but I have not really dived much into the company. Typically a good sustainable dividend is 2 to 3%. 4 or 5 would be at the most. If we look at the annual payout, it's $8 per share. So every share that you own of this company, you would get a total of $8 per year. They do pay out quarterly, so you would get $2 every single quarter, and then there's 4 quarters in a year, so you would get paid that. Payout ratio, I'm not even sure if this value is correct, but that is a ridiculous payout ratio if it would be true. I don't believe it is, but if we look at the 5-year CAGR, 5.94%, kind of at the lower end of the 5-year CAGR. This means in the past 5 years, how much have they increased their dividend, and it's been in the lower range. I typically try to aim for a double-digit 5-year CAGR, especially since I do have a 5, 10, 15, 20-year time horizon. That is when the beauty of the compounding will work. Dividend growth is actually 0 years here, apparently, to Seeking Alpha. Yeah, guys, this is IEP. Let's go ahead and pull up the calculator. We can actually do some calculations, crunch some numbers. So first one we're going to do is try to figure out how much do you need to make $1,000 every single month. So we want to make $1,000 every single month. You're going to multiply that times 12. There's 12 months in a year. So overall in the year we need to make $12,000. We're going to find out how many shares we need to actually make this amount. So you have the annual payout. You're just going to divide the 12,000 by $8, which gives you 1,500 shares that you'll need to own of this company. And then to find out the total amount invested in this company at the current moment, you would just multiply that times $49.60. So you need to roughly own about $74,000 invested in this company. You'd be making roughly about $1,000 a month. Again, you got to be careful because this is a huge dividend rate and potentially could get cut. So I'm not 100% sure on that, but just be careful with that. Go with caution. Quick way to calculate this is 12,000. You just divide it by the dividend yield, so 16%, and that gives you roughly around also $74,000. Let's go ahead and do the other one, which is $100 every single month. So 100 times 12 for 12 months in a year. So $1,200 is what we need to make annually. So you divide this by the $8. So we need to have about 150 shares of this company. You multiply it times $49.60, and you need to own about $7,440 in this company. Quick way to calculate this is 1,200 divided by the dividend yield, which is 16%, so about 7,400. Very, very fast to calculate that one. Another one, which is going to be the best one, is $100 every single week. There's actually 52 weeks in a year, so you multiply it times that. So you need to roughly make about 5,200. $100 every week would be pretty amazing, guys. I definitely would love that, but obviously, that would increase the compounding way faster. Annual payout is $8, so we're going to divide that by $8, not $9. And we need to own roughly about 650 shares. You're going to multiply that times the $49.60. And that gives you roughly around, you need to have invested in this company $32,000. Quick way again to calculate this is 5,200 divided by the dividend yield, and that kind of roughly gives you about 32,000 as well. So you don't need a lot of capital compared to a lot of the other companies, but again, it's that dividend yield that's huge. And the worst thing that could happen is if it gets cut, then you're gonna be down quite a bit. But I prefer my 2 to 3 to 4% dividend yielding companies. But let's go ahead and go over here to the dividend yield to see when the best opportunity of this company, or when the best time or the highest dividend yield was for this company. You'll see this is actually the dividend yield right here. So over time, you'll see that this was actually fluctuating around 9 to 10%, and then it spiked up in 2020. Almost every single company spiked up almost 20% here, and it's been actually fluctuating around 15-16% in these past 2 years. So maybe it's a great opportunity here if you do believe in this company in the long term. I am not invested in this company. Let me know in the comment section if you are, or if you plan to. What do you think of this company as well? If you want me to cover any new company, let me know in the comment section. And while you're down there, also make sure that you're subscribed with that bell notification. We're trying to get to 8,000 subscribers, so definitely help me out. And don't forget to drop a big thumbs up on the video. I will catch you guys next video. Take care, stay safe out there. Bye, guys.